Hello traders, Gary Wagner here. It is approximately 8:35 in Honolulu, Hawaii. This is Friday, the 29th day of July, and this is the daily report for silver, our weekend review. And what a week we saw in the market itself. Tremendous highs, lows, and the market in essence is closing unchanged on the week. I do want to start with our weekly chart. Of course, traders, we're currently at 39.98. We went long our silver contracts at approximately 35.93, and that was back on the 11th of July. Trailing our stops up throughout, we were hit with our stop in nice profits, almost $4, and that was just the other day. As I said, we're roughly 20 cents from that area right now. Based upon a COMEX contract of silver, that returned about 19,000 per 5,000 ounce contract. I believe margin requirement is roughly 22,000 on that. Quite a nice return for a trade lasting under a month in time. Now, when we look at the weekly chart, what I'm noticing, this is straight candlestick format, and as you know, I put a basic Fibonacci retracement going from the low here at 33 to this top here at 41.39, and as you can see, the low that we hit, which is 39.38, falls in line with a 23% retracement of this last rally. I believe that because of the tremendous uncertainty this weekend as to whether or not the U.S. will resolve its issue with its deficit that it has and its debt ceiling that it has, that we could get a tremendous knee-jerk reaction if in fact they do resolve the particular crisis that we are in. Because realize, traders, August 2nd is not that far off. It's literally in sight now. My expectation is there should be some sort of compromise this weekend, Monday at the latest, and that could put pressure on the metals markets. Silver, which has been our star performer, is also the most volatile, both with us as well as against us. For that reason, my recommendation has been, once we pulled profits, to wait out at least the weekend before looking to re-enter. Now, here's my sentiment. If in fact, and let's go to our daily chart to illustrate the point that I'm going to try to make, if in fact we get a bullish scenario which is favorable to the metals, that should move it above that critical $41 mark that up till now, as you can see on our daily chart, the market has been unable to achieve. You can see how it attempted to on 1, 2, 3 days over the week to no avail. Because of that, my sentiment is that there is a decent probability, I don't believe a high probability, but a realistic probability that the market could, because it's range bound, could move up here, could trade to this 38% before moving higher. My expectation, my targets are $45.50, $43. Those are the next targets. However, before that becomes achievable, we need to sustain a rally which gives us, on a closing basis, traders, price points above $41 per ounce, and quite honestly, we have not seen it as of yet. That's why I'm extremely satisfied with the profits that we pulled in silver this week. Now, when we take a look at our Henkin style charts, this of course is a 720-minute chart, meaning you get 2 average candles per day. As you can see, there is no doubt that in terms of the average chart, we are still in a minor corrective mode. There can be no doubt about that. if we take a look at the recent activity, this is where that market went above but unable to sustain on a closing basis that $41. It makes an attempt, but as you can see, you get this doji, that pivot point, and then the candles go red. Now, no tail, no tail, no tail, but what I'm noticing today is we have a pivot point Henkin candle again. And you will always, not always, but the majority of the time, when you get these tops, it will be preceded by a small bodied, a set of pivot points. You don't get it here, but as you can see, in most occasions, you get some sort of a pivot point, meaning that small bodied doji-like candle, even in the Henkins, prior to it reversing. To me, that says there is potential there. Also, the strength of this correction is absolutely waning. There's no doubt about that. But realize, traders, this market is going to be rumor and news fundamentally driven right now. We need to have some caution before re-entering a position. I am much more comfortable buying the breakout at 41 than getting in at an inappropriate time. Lastly, we'll take a look at our daily chart. This daily chart, of course, has some Elliott wave as well as our Fibonacci retracement points. You can see on a daily basis we are still firmly within wave 1, but in terms of our subcount, wave 5, in our subcount, this would be wave 1. This is probably the correction of 2. So in other words, what I would look for interim term in the market, possibly one possible scenario comes here, comes down and tests, that's 2, and then we go into 3. 3 takes us to my new price point or target, which is $43 per ounce. This has been Gary Wagner, wishing you, as always, good trading, and we will talk to you on Monday for another daily review and update. Bye-bye.
Mm-hmm.